It's 5 o'clock in London. It's midday in New York, 1 a.m. in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 6 o'clock indeed in the evening here in Torun in Poland, and it's 11:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID live stream, Series 22, Episode 6. In the aggregate, that makes us episode 132. Starts here. When it comes to blistering results, the very top of Young's pyramid showed leadership on the balance sheet, with ICE advancing our "It's the New Ice Age" thesis further still with their 18th consecutive year of record profits. Last time they didn't have a record profit, I think Michelle Bachelet was actually the president of Chile, and Google had just bought YouTube for $1.65 billion. Sounds like quite a deal in today's terms. I think they probably pay some influencers that sort of amount of money nowadays out of the YouTube Google coffers. Anyway, ICE remain in the AAAS business. That's awesome as a service, as we like to call it, with this 18th year of record profits. The results call was, as ever, a Sprecherian masterclass. And indeed, if you were listening, RIP Mr. Willens, a passionate investor from the greatest generation. Incredible as ICE results are, it's equally incredible to see how so close to the driven entrepreneurial genius of Intercontinental Exchange, careerist blobism has taken hold at Backed, and it's in danger of running out of cash soon, with a $150 million infusion required. It's a more certain future for Nicholas Agassiz, who will step down as Hong Kong Exchange's CEO 2 months earlier than planned, having been part of a masterful handover which showed Hong Kong Exchange's group's true class as a parish-leading corporation. All the best to new CEO Bonnie Chan, entering office on March the 1st. The right woman in the right place at the right time, we firmly believe. Good luck also to Good Show, wherever he may end up next in the parish or beyond it. It's been a pleasure knowing you and seeing you lead Hong Kong exchanges. Today, ladies and gentlemen, our guest is Rafael Plata. We are looking at the topic of clearing Europe. Rafael is the Secretary General of the European Association of CCP Clearinghouses, each the trade body that represents European CCPs. A seasoned professional of capital markets industry, he's got over 20 years' experience and has in the past represented the interests of regulated markets at FESE, contributed to EU policy making at the office of an MEP in the Europarl, and advised pension funds as an investment consultant. He's a member of the ESMA Consultative Working Group for CCP Policy and the ECB's Market Infrastructures Consultative Group, which goes by the acronym AMI SeCO. Rafael also acts as an editorial board member of the Journal of Securities Operations and Custody, and member of the board and chair of Leadership Circle at the European Society of Foreign Association Executives. He's lectured on CCP clearing at the Solvay School of Economics and Management. And I think with an introduction like that, it's easy to see why our topic is today clearing Europe. Rafael, welcome to IPO-VID. It's lovely to see you. Where in the world are you today?
Thank you very much, Patrick. Pleasure to be here today. I am in Brussels, with still some light outside, but grey as usual, but nice Brussels evening here.
Yes, it has to be said. I mean, I'm always in awe at how you can manage to come from beautiful, sunny, warm Spain and manage to thrive in Brussels. I mean, it's a great city, it's wonderful, but the weather doesn't really match up to your beautiful homeland, does it?
It doesn't, no, Patrick. I come from the south of Spain, from Andalusia, from Cordoba, to be precise, and the weather is so much more different than in here in Brussels. But as you say, and you know Brussels quite well, so Brussels is a bustling place, full of people from everywhere around the world. It is a bit like I go on the street, and it's a bit like traveling around the world in a couple of neighborhoods in here. So that makes it a very interesting environment to be, and you manage to forget about the weather. Yeah.
Well, it certainly keeps you busy, so I'm sure that stops you from worrying too much about the weather a lot of the day long. Tell me, Rafael, how did you come to be in the financial markets?
To be honest, Patrick, I was hesitating, should I say this or not in front of people, but actually the truth is that it was by chance that I ended up in financial markets. And now I've spent 20 years in capital markets, but just purely by chance, I have to say. I studied business and economics, and when I finished my degree, I was offered, or before I finished actually, I was offered a position in a consulting firm in Madrid. So I was very excited, and that consulting firm was an HR firm. So it was a human resource consulting. They did compensation and benefits for different companies. And just a couple of weeks before I started, they rang me up and said, well, actually, there's you have this internship on compensation and benefits, but there's something perhaps even more interesting than that. We're starting to set up a new department, which is about investments. It's about investments for pension funds, where do they put their money, etc. And would you like to join that one instead of compensation? I was like, well, why not? I always like economics. Perhaps finance, I was attracted, but I was more into the economic side of finance. And then I said, well, why not? Let's try that. Well, more than 20 years later, here I am with a full career on capital markets. So that's how I started, Patrick. It was a bit by chance, I have to say.
So you're not the only person who said that they got here by chance. I mean, we've had all sorts of fascinating past. I love the tales of the people who started out very much on the hard left of politics, arrived in order to manage to find out and study and work out that markets were all wrong, then discovered actually markets weren't so bad after all, and came out the other side of the equation. So we've had them all in terms of people who managed to come here. I think I'm one of the few people who actually consciously wanted to be in financial markets from an early age, which just demonstrated, I think, what a boring child I probably was. But if nothing else, I mean, Rafael, tell us then, how did you manage to make the move into Brussels and into the business of the European Union?
Yeah, well actually, so as I said, I was, I studied my career in Madrid, in Spain. So I was advising pension funds, I was an intern in the department advising pension funds about their investments. So where to allocate their investments and which asset managers to choose, and doing a bit of portfolio measuring of the results. And that was 1 year into the job, but a bit less than 1 year into the job, I was actually told, well, listen, actually the department did not function as we thought it would function. So actually, unfortunately, we'll need to wind down the department, and there's no other possibility for you to stay. So I thought, oh, all right, well, that's a bit of a pity, because I had been told you're gonna stay, we're gonna offer a full-time contract. And this is probably one of these things, Patrick, that one actually feels very proud of after so long. One of these milestones in life, because at that time, the boss, at that time, my boss had actually promised, yeah, we'll hire you. And she did not deliver. So there I was, a 22 years old intern standing up to a 40-something years old person, industry veteran, and saying to her, well, listen, you disappointed me, because you said to me that you were going to hire me and you didn't. And that's really disappointing. You did not deliver. And then I left. Well, 2 weeks later, she came to my office and she said to me, you said to me that I disappointed you because I didn't offer you a full-time contract. Well, what about if you went to Brussels? And I was like, oh, what do you mean? It's like, well, listen, you really shocked me with your comment that I disappointed you. So I spoke to our office in Brussels. They've got an opening for you. And they go, if you want, you can join them. So I said, well, why not? I can go there for a couple of years. And again, yeah, 22 years later, here I am. So that was my transfer from Madrid to Spain. So again, not really by chance, but really probably by saying, I want to do this. So I came to Brussels, still nothing to do with EU affairs. But then once you're here in Brussels, as you know, you hear people talking about EU affairs. So I started studying at the same time as working master degree in European economics to sort of try to do that link between my financial experience in consulting with the EU experience. And this is what I did. At some point, I quit my job because I said, well, listen, I'm 25, I can do this, and I can do this now. So I quit my job and I started working as an MEP assistant at the European Parliament to try to gain some experience, like first-hand experience in European politics. Or European policy making, that is. And then after that, there was a possibility for the European Federation of the Stock Exchanges. There was an opening there. They wanted somebody to develop their statistics and economics department. So they said, well, you know, you come from consulting, why not? So I joined them, and this is what my love story with the clearing world started, Patrick. Because a couple of months into me joining the Federation of Stock Exchanges, and again, I was meant to develop the statistics department, and I very much enjoyed that. But my boss came to me and said, listen, there is this new thing, there's this project about clearing and something, and we don't really know exactly what it is, but it is something technical. You come from consulting. I'm sure you can do that. And she was fantastic, Judith. She was, as you know, and she was fantastic. So she was like, you can do this, you can do this. So I said, okay, why not? And I had absolutely no clue what clearing was at the time, I admit. But that's when the love story started. Yeah, that was 2006.
That's quite fascinating, because I mean, you joined FESE as you say, then, you know, the Federation, European Federation of Stock Exchanges, and it became then subsequently, I think it was just on the cusp of really expanding, because it had been very, very much plain vanilla cash markets, and it was moving into 3 dimensions under the rather transformative era of Judith Hart. And you were part of this fantastic, very young team that was brought on. I mean, there was you, there was Luca, there was Rosa, who we had, Rosa Armesto gave us a great show last year from Brussels with Love, which is really worth talking and listening to again, ladies and gentlemen, if you're around. And yeah, I mean, you find yourself at this incredible explosion of the whole FESE organization. So I hadn't realized it was 20-something years ago was the point in time when you suddenly discovered this amazing world of central counterparties and how they really took off. But that then obviously vaulted you forward into the future. And we'll get to that in just a second, because ladies and gentlemen, this is specialist content, and we need to get this up the algorithm. The AI, that artificial intelligent thing that exists on Facebook or LinkedIn or YouTube, wherever you're watching Clearing Europe with Rafael, Plata, and myself, Patrick Young, we need your love. So please, can you give us a little bit of love right now? Because any likes, they transfer through, and it means more people get to see this content, and we get the opportunity to transfer and help people understand much better. Absolutely, Rafael. Much, much better. What is the world of central counterparty clearing? Because it's essential to our society in every single aspect. So thank you for that, ladies and gentlemen, in advance for that little bit of love. Rafael, how did you then manage to make the move? You had an incredibly glorious period with FESE, and you were invited to establish the European Association of Clearinghouses. How did that come around?
Well, actually, so again, as I said, I joined FESE in 2006, and a couple of years later, Lehman happened. And when Lehman happened and the great financial crisis unraveled, I was there, part of the team, dealing with all the regulatory overhaul that followed. And that was, as you know, at global level, at regional level, in particular, perhaps in Europe and the US, there were, and a couple of other jurisdictions, there were perhaps a bit more the front running in terms of legislation. So we had legislation, regional level, global level. It was a plethora of legislation to try to address what happened during the global financial crisis. It was actually a great time, I have to say. It was a wonderful sort of like master degree in politics, in lobbying, in financial markets in a very short period of time. And at that time, so there was a lot of regulation that affected clearing, and there was regulation that affected clearing and trading because of the links between those exchanges that work very closely with the CCP to develop derivatives products, in particular listed derivative products. And I got involved quite a lot in defending the interests of exchanges and to some extent CCPs, because they did not have a shop open actually to defend their interests. They did have an association, but it was a bit of a members club without really professional secretariat working for them. At the same time, there were also some moves in clearing and settlement in Europe, because the ECB decided to set up the Target to Securities platform, which started also in 2006. So there was quite a lot of movement on clearing and settlement, and I got involved in all that. Well, 2013 came, and after all this regulatory wave on clearing and the whole clearing ecosystem, the CCP Association said, well, listen, we really need to hire someone to actually represent our interests professionally here in Brussels. And they put out a job vacancy. And when I saw the ad, I actually hesitated because I was actually very happy with the previous job. I really liked the members, the exchanges, etc. And but of course I knew everyone at each, or most people at each. And I remember it was actually a former colleague of mine that used to work at the time for NYC Euronext. So Alejandro, and he said to me, Rafael, you need to apply. This is your job. And I was like, oh yeah, I was hesitating, to be honest, and I'm not sure. It's like, it's your job, look at it. So thanks to him, I said, okay, listen, no, it is. I really like it. Let's give that a try. Let's give that a try. With a bit of a broken heart, like live in a place that I really liked, or potentially live in a place. So therefore, I applied, and immediately I got a phone call from the board and said, okay, could you interview tomorrow? And I was like, yeah, sure, I can do that. and 10 years later, we built an association from scratch. So I'm really, really happy with that.
Well, it's quite incredible because, I mean, you built an association from scratch, you've expanded the membership over the course of those years, and well, I can well remember visiting you when you were in one single room, which was barely furnished, and it really had all the elements of a startup, except here you were as an NGO that was there to lobby. But it was an incredible time because obviously all of the change that had taken place, I mean, as you said, the Lehman's debacle, and then that transmogrified into the 2009 Pittsburgh G20 conference, which was probably the most epic G20 in terms of how it impacted financial markets. And you've just had, I mean, a welter of regulations and other things coming through over the course of that time since each has been established. Has it been an overwhelming experience?
No. Overwhelming in the negative sense, no. Overwhelmingly wonderful, probably, yes. If I can be just perhaps poetic and exaggerated for a minute, Patrick, I keep on repeating that I do not save the life of children somewhere in the world, but other than that, I think I've got the perfect job for me. It's been fantastic. It's been really challenging because, as I said, it was setting up an association from scratch. I tell you something, the first year, and if there's someone in the audience that managing an association probably could relate to this, but my first year in the job, I spent my year, in addition to building the association, convincing half of my members why on earth were they paying me a salary? Because several of them were like, why do we need someone? Really? And I remember somebody that in the end said, no, you were right. But I remember somebody, a high-level executive from a medium-sized CCP in Europe said to me, Rafael, come on, let's be honest. What you guys do, that, I mean, lobbying and policy making, that you've got no influence. Which influence do we have? And I was like, well, let's see. And several years later, I said, no, you were right. we can actually help shape policy making. Of course, we're just an actor from the outside. We try to provide objective data and justifications to the authorities, and then, of course, it's up to them to inform themselves as much as possible from all the stakeholders available and make the right decisions. But I think I'm very, very proud that at all this time, we've had very strong values at each to try to provide objective, fact-based data into policymaking. We've been, I think, we built quite a fame of being trustworthy, of being an association that you can count on. No, if I may, at this time of the day, no bullshit association, because I just don't believe in lobbying that way, although I've seen lobbying that way. I think it is more, we need to think broader than our association. We need to think of the whole industry, of the whole economy, and this has proven really useful. And I'm very proud of everything that we have achieved with the full with the full community of the clearing and for each family.
It's very interesting because, and I'm not going to single out the European Union here, every government the world over, every governmental body the world over struggles to understand the importance of clearing. And I'm just curious because your experience, I'm sure, is very similar. It takes it's not a very easy concept to get to people in 1 or 2 minutes, but at the same time, it's absolutely essential because it's the interlinkage of absolutely everything, not just the banking system and finance per se, but whether or not Belgian chocolatiers, and I mean, this is a serious political point, whether or not Belgian chocolatiers get the right cocoa delivered to them via Rotterdam. So CCP clearing is so important to markets. How have you found the process of trying to educate the stakeholders beyond the CCP business over the course of your 10 years with each?
Well, I think I've been pretty lucky because some of the stakeholders were actually very knowledgeable. You know, you think of a former MEP, Kay Swinburne. You know, she was a former investment banker. So obviously, you know, I didn't have to educate anything to her, so she would know everything. But then there's indeed some stakeholders that just come relatively new to clearing, or perhaps they were experts in a totally different field in financial services, and they just happen to start into clearing. So I think we've always tried to approach it by bringing it down to the essence and understanding the level of our interlocutor, trying to listen to the interlocutor, trying to read the body language, trying to inform ourselves about her or him before we speak to them. And like this, by listening, adapting, and really doing the hard work of bringing things down to the essence of what we do and to something that is something that resonates, that people are able to see. I think this is the way we did. I tell you what, I still probably have not mastered doing this because my family keeps on asking me, so what exactly do you do? And then, you know, I spent it on so many times, and my sister once said to me, well, listen, no, I get it, but when you get to the office in the morning, what do you do? And so I think there is that hard time, but I think it's been really a very interesting story with the members of the European Parliament. That actually, in the case of members of the European Parliament, they're very much used to new things all the time, so they are relatively keen and able to get into things immediately. You're able to explain this to them in the right terms. And mind you, in a lot of these meetings, as you know, they may give you 10 minutes. And you've got 10 minutes to explain to someone that has absolutely no clue about your industry, what your industry is, and in addition, what is your key point that you would like them to take into account. So again, adapting, listening to the interlocutor, and trying to bring things down to the essence, that has been one of the key points I think that we've been very good at doing.
I think that's a very good point because at least the European Parliament is relatively open to learning a lot of new things, which may not be the case with a lot of other more, say, established diets because they've been used to doing these things for maybe hundreds of years. But it is incredibly difficult to get any message across in 10 minutes, and particularly one where you start with this intrinsic concept of, well, you know, each counterparty meets with the other counterparty and the central clearing party reduces, and it's like, oh my goodness. I mean, I can just see how many people's eyes will glaze over within seconds. It's always a challenge to try and get that across. So, you know, full play to you and your team and your members. I think one thing that certainly struck me has been how enthusiastic each is as a group. I mean, I've been to 1 or 2 of your behind closed doors meetings and so on, a lovely dinner a few years ago. And actually, one thing that did strike me is how positive your membership is. And I don't mean that as a terrible negative against all other associations, but sometimes you can meet industry associations in Brussels, not necessarily in finance either, in all sorts of industries, and they're really plagued by this sense of ongoing doubt about their role or problems with trying to get their message across. Whereas I have to applaud you. Each always seems incredibly upbeat, despite the fact that you're selling one of the most complex messages for the Commission and the European Parliament to really understand.
Well, I tell you what, Patrick, I couldn't agree more. If you think of the actual definition of a CCP new legislation, let's take that example. A CCP is a financial institution that stands between the buyer and the seller, becoming the buyer to the seller and the seller to the buyer. It's like, what? if you explain that to people, they'll be like, what is that really? So you really need to try to make it palatable. And I think we did a lot of charts. We did a lot of drawings, and I actually like drawing a lot when I'm in meeting with someone that has no clue, so that people. I like images quite a lot. So I think we've been doing that, and that has been quite useful. And then to the membership. I couldn't agree more with you, Patrick. I think I am absolutely blessed with each membership. We've got 18 CCPs that are members of the association. Over the years, we had quite, different people representing the CCPs that have joined the board, the policy committee, the risk committee, all of the groups that we've got. And I think at every single one of these groups, we had a very nice atmosphere. And we really tried to work on that, and we really tried to ensure that, as we did with members of the European Parliament or with global authorities or with the European Commission, the Bank of England, whatever, we tried to listen to the people as much as possible. And if you speak to my absolutely dream team colleagues, Elena, Max, or Carol, they would say, oh yeah, we're fed up with Rafael saying, we need to adapt, we need to listen, what do they say? Did you see the body language? So we really try to understand what is important for them and how can we deliver that in the best possible way, the most efficient way. And yes, a lot of times that got different views, and you know that you reported about this, you've written about this, the opposing views of each members in different subjects. Of course, they're commercial companies, they compete with each other, so they've got opposing views in some elements. But I am really blessed with the fact that here in each meetings, yes, we had some tough meetings. Yes, I had some tough bilateral calls with some of them, but it was the price to pay to actually try to make sure that they could speak, we could understand, and we could try to find a solution. We tried everything. If trying everything did not work, it meant we just could not find a solution. So we need to move, we need to drop that subject and move somewhere else. And I think this is why probably our membership is so engaged, because they see that they are listened to, we do things, and they see a value. They see they see a value in what we do. Just add something, Patrick. As you said in my bio, I'm part of the board of a European Association of Association Executives. And we try to promote the business of managing associations. And a regular topic is, can we measure the value added by a trade association? Most people answer, no, you cannot. I, from the beginning, said, yes, you can. Just it's a bit hard, but you need to try to do that. And we actually managed to measure it in several instances in the potential impact on the profit and loss of each one of our members. And these, when they see that, they're like, oh, well, of course, those figures is an order of magnitude. We cannot be extremely precise. But given an order of magnitude, this is how much you saved. You potentially saved, this is how much you potentially could win. They see, all right, so this is why we're actually doing this. And this is the result they get. So they get business opportunities, so lowering costs. And of course, it's not just the four of us that does it in here, it's the full team. And we see the engagement, the massive engagement of each membership, together with the wonderful team that I've got, it is what makes that difference. So from that point of view, I think we are relatively small, but perhaps boutique trade association that really try to focus on that element that has an impact on the P&L of members.
So it's very interesting because, I mean, obviously the last 10, 15 years saw this dynamic change. I mean, the CCP business has revolutionized insofar as all of that OTC business has gradually, predominantly been pushed into the central counterparty clearing world. And that obviously changed a lot of different. I love your beautiful way that you differentiated between overwhelming in a negative sense and the overwhelming benefit of what's going on. What do you think, therefore, we're looking at the moment? I mean, what is the status quo of the CCP business, and what are the biggest challenges that it's facing?
Where are we? I think we are in a constant evolution. I am not sure. When I say status quo, it makes me think, what is like something that stops. I think where we are at the moment where CCPs are increasingly competing with each other. I remember being, in particular, picking on London because it's one of my favorite places to go to conferences, to speak in conferences, because people really challenge you. And I remember quite a lot of people saying years ago, oh, Rafa, yeah, your members do not compete with each other. And I said to them, well, yes, you should see some of my board meetings and see some of the discussions on, as I was saying before, on those issues where they have opposing views. So CCPs do compete with each other. They compete increasingly with each other. And European CCPs, the market at the moment is relatively limited. If you compare to the US, it is like probably, 1/10, perhaps even in some cases, of the size if we talk about the exchange market. So, and these, the figures much better because you do produce those figures. But the trouble that they found that they have is that they really trying to compete with each other. So it's a very dynamic, competitive landscape. They're trying to launch new products. We've seen some CCPs going into crypto derivatives. We've seen quite an increase of other asset classes like repos also being cleared, and definitely the OTC derivatives business. So there is, since the global financial crisis, we have seen quite an increase of the interest rate derivatives, interest rate swaps, but also to some extent credit default swaps also being increasingly cleared by CCPs. We also see CCPs developing into the energy space. So I think the status quo is that CCPs are competing increasingly with each other and trying to open new business opportunities for users to be able to risk manage the portfolios in a much better way with more participants. So increasing the pool of participants that come into clearing, increasing the pool towards pension funds, towards insurance companies, towards other types of funds like money market funds, for example. So you try to increase the community and also increase the products that you offer to that community. So I think this is where we are probably at the moment. And where are we going in the future? I think this trend of competition is really going to increase from my point of view. If you look at the equity space, as you know, you reported on this, Patrick, the profit margin of equity CCPs is very, very small. And we probably come to almost the limit of the cost base for equity CCPs. So can they do much more than this? Well, I'm sure they'll come up with some ideas, but we're really at the edge of competition there. And on the other products, there's more and more products coming to the market, more and more people trying to get into CCP clearing. So that's a bit where we are in a dynamic. The status quo is perhaps paradoxical, but the status quo is a bit of a dynamic one.
But it's very dynamic, and I agree with you completely. And certainly, it's fascinating. You mentioned the fact of, well, perhaps we're reaching a sort of limit to growth for cash equity CCPs. But it's also important to remember that, well, 25 years ago, one of the people in this particular show wrote a book, and he said, well, the thing of the future, one of the things of the future is going to be that you're going to see all cash equities being settled, but they're going to head into a CCP before they do that, and they have to have some sort of a clearing position, because I happen to think that even T+2 days, which is T+, 173,000 seconds, give or take, was quite important. And actually at that point in time, we were mostly at T+3, so we were actually at T+210 or 215,000 seconds. And yet at the time, everybody laughed at it, which is very funny. I mean, there were only, I think, 2 people who came out and said, it's a very good point at /watch this space. One of them was David Hardy, who was the boss of the LCH at the time. And here we are 25 years later, and people are sort of going, oh, well, I'm not sure where the next spate of growth is in equity CCPs. And you think about it, well, 25 years ago, the whole segment didn't exist. And you look at how much risk has been sucked out of the system as a result of that. It's absolutely marvelous. And your point is certainly well made in terms of what's going on. Of course, I mentioned that. I mean, T+ 173,000 seconds, T+ 86,400 seconds, whatever. There's obviously a big push for shorter settlement times that are occurring around the world. That's obviously going to have quite an impact on your members in many different ways, including however the ultimate regulations are decided, presuming that Europe is going to follow the American trend, which seems plausible.
Yeah, it does seem plausible. I'd say it's probably even more than plausible, because it looks like the European authorities have decided that we should be doing that. And it's not about if, it's about when. I think this is the mantra that they've been putting out, perhaps rightly so. So it looks like this is going to happen. It will happen for securities. So definitely cash equities and fixed income. And it is going to happen likely, I think the bets are that it will likely happen in the EU in second half of 2027. But I guess that is important in itself, because it's going to be quite an investment for the whole industry to try to accommodate that. We actually calculated the potential margin savings that could be gained by users as a result of reducing the settlement cycle. And as some people outside of this industry could imagine, oh, if you reduce by half the time, your margins would be reduced by half. Well, that is not the case. We estimated, and similar estimates have been made in the US, that the margin reduction would be around between 25 and 30% of the margins. Wow. That's for equity and fixed income. So if you look at equity and fixed income, we are talking about real reduction of margins, Patrick. Well, that means like around 1% of margin reductions of the total margins charged by CCPs in Europe at the moment. So we're talking about a 1% reduction in total. Why? Because most of the margin charged by CCPs, of course, comes from the derivatives side.
Derivative business,
and of course, these margins, this reduction of margins, so this is right, this is the reduction of margins, but as you know, margins is not exactly the cost for the users. This is the cost of funding those margins. We're estimating that to be in the areas of around 18 million with an M, 18 million euros. So it's peanuts for the industry.
Yeah, pro rata to the amount of the industry.
Yeah, with JP Morgan announcing record profits last year of around 50 billion euros. Yeah. So 18 million euros for the whole industry is really peanuts. So it's not about cost. It's not about cost reduction, but it is perhaps about making Europe, being there where the others are, trying to be competitive, trying to follow the trend that others are doing. But I think in this case, the EU is doing it perhaps by chance, but quite intelligently, because the US move will happen in May this year. There's moves that happen already in India and China and other jurisdictions, and the EU would probably have the chance to watch the space in the US, see what happens, and try to, if there's any issues, try to learn from those and develop. But I think that is happening. That is going to be a big project. But I think the point, probably the bigger point, is we're shortening the time of trading and settlement, from trading to settlement. We're shortening that time in the future. So are we going to go into instant settlement? I'm sure that my nephews would probably say, of course, yes. I mean, if I buy something online, if I buy a ticket for a concert, I get it immediately. So of course, surely everyone should get those shares immediately. So perhaps this is where we're going, but I think there is probably going to be a barrier in terms of what we call T+0, because as you know, there's different types of T+0, and one thing is instantaneous settlement, and something else is T+0, say some minutes or some hours after the trading.
Absolutely. I mean, I wrote a white paper actually a few years ago about towards a real-time clearing market, which you'll well remember. And it's so interesting to give in a number of presentations because people talk about T+0 settlement, and nobody really seems to understand quite what they mean by T+0 settlement when they start the concept, because what does that mean? Is it T+0 seconds? Because that's essentially impossible. So what is it going to be? Well, look at Bitcoin. They say that's wonderful. It's T+540 seconds on average. And I say, yeah, well, that sounds fantastic. Certainly better than 86,400, which is a day, or 173,000 as we got at the moment in T+2 securities. But the difficulty is, I mean, we're what actually it's 9 years and 11 months ago, just coming up for the 10-year anniversary. Hanmag Securities in Korea goes bust. Starts the day at $20 million in capital, ends the day with minus $25 million in capital as a result of an algorithm going wrong for 143 seconds. So there's still a big business out there for the CCP market, no matter what it strikes me, even if you end up with absolute real-time clearing, because there's probably going to need to be a margin in order to manage to just take those 2 or 3 minutes of risk away. So it's fascinating what you're talking about. And actually, we've got a couple of questions. I've just arrived on my desk. First of all, messy times. I would just like to point out at this point in time, if you're a football fan in Southeast Asia, Messi Times is not, although he's in Florida, he's not related to the Messi football player that you're all trying to lynch at the moment because he didn't turn up for those exhibition games last week, causing, interestingly enough, huge ructions in Argentine-Chinese diplomacy, which weren't looking very good ever since they elected President Milei last month. Who would think about it? Football could do these incredible things. Not sure how you can manage that from a CCP basis, Rafael. But anyway, to the question from Chris Messina. Are the products which are natively OTC to which you as a clearing are there products which are natively OTC to which you as a clearing association believe are not suited to central counterparty clearing that you will resist forcing into a clearing regime? things are getting a bit tripartite there. Go ahead.
Absolutely, yes. There are products that I would not suggest that they have to be cleared. There are products that are very much tailored. So if you've got a product that has been done with particular characteristics by the bilateral world for a particular client in the bilateral world that wants something very specific, no, that cannot be cleared. Why cannot be cleared? It's something, I think, Patrick, here we should come back to the basics. Why cannot be cleared? Because CCPs, they want to clear anything that they can risk manage. And anything that they can risk manage means that in a default, the CCP is able to put that back to the market or transfer it to someone else, to a different clearing member in the case of the positions of a client using a clearing member to access the CCP. So if the CCP, for the CCP to be able to do that, that product cannot be extremely specific, because if it is, who's going to take it? It is like, is the wonderful, for me, is the great example of the real estate industry. You know, if people want to buy an apartment, I remember a real estate person once told me, don't do anything weird in an apartment if you buy it and you want to sell it at some point, if it is an investment. Don't include an Egyptian fountain somewhere, because I'm sure you'll find it really wonderful, and some of the archaeologists like these will also find it really wonderful, but the average people will not like it because it's not standard, it's not standardized. So there's lots of products that are not standardized, and they are not suitable for clearing. However, there are some products that perhaps they're a bit of lookalikes. They are not cleared, but they are lookalikes to what it is cleared. I think there's less and less of those. 10 years ago, there were more. But those products that are more lookalikes, well, those, they might have an option to be cleared. And there's some products that, you know, if you look at, that have started to clear more and more over the years. So the repo case is one example. So we now have about like close to 60% of the repo market in Europe being cleared, as opposed to around 30 some years ago, 30% some years ago. So that has been an increase. But in terms of OTC derivatives, which I think is what the question refers to, no, not everything should be cleared.
And in fact, we've got a very rapid remark there from Chris Messina has come straight back. Thank you, Rafael, and thank heavens you're not a clearing absolutist. I think that's a very apt remark to make, because I think that's also one of the most important things to be pragmatic about, because I seem to recall, gosh, I'm going to get my numbers wrong, I'm sure, here, if there's somebody from LCH watching, but I seem to recall in the very early days of the post-2008 environment that LCH had identified something like 238 different kinds of derivative, and they'd actually sat down and gone, there are at least, I can't remember what the number was, but 60, 80, 100 that simply couldn't be cleared in a central counterparty clearing because it actually did not reduce the risk. And that's the whole point about what we're talking about. And for those of you out there who may be watching this and thinking, gosh, I don't really understand, you know, how vital central clearing is, I think it's always the way I've introduced it, was always to say, well, you know, you never really think about your kidney or your lungs until you have a problem, but they're actually there day in, day out on T+0, working away happily to manage to make sure that your body functions. And very much that's what we're talking about in the financial market sense. And let me give you a little break for a second there, because you've been doing wonderful things, talking the whole way through the first 43 minutes. We're going to have a great question in a moment from Anne Berg. I want to move to our book of the week, ladies and gentlemen. Where are the customers' yachts? It's an absolute classic of the Wall Street canon from the 20th century, written by Fred Schwed Jr. It is funny. It has great lessons. It's a wonderful book teaching you all about the way that Wall Street used to work, and whisper it softly, even in a digital electronic age, it's not exactly 7 sigma away from where Wall Street works today, or indeed the rest of the world's financial markets. It's a fabulous tome in paperback, a true investment classic. If you fancy it, you can go along to the links on our showreel site at exchangeinvest.com and just click on a link. We even get, oh gosh, I think 50 cents or $1 or something like that out of the Amazon millions in order to sell you the book. But it's really worth a read. Wherever you can pick it up, it's a great, great tome about the way that financial markets work and understanding with a lot of humor, and also some great walk-on caricatures of many of the great names of Wall Street in the pre-war, post-war period. So that's our book of the week. Don't forget, you can pick that up. If you're looking for our next book of the week recommendation, it comes earliest in Exchange Invest weekend, which is absolutely free, ladies and gentlemen. How do we manage to do it? Give away this live stream podcast and also a weekend newsletter. Actually, I don't know some days, but Exchange Invest weekend's absolutely free. You can sign up for that at exchangeinvest.com. If you want to add something to our coffers, don't forget the Journal of the World of Market Structure, talking about central counterparty clearinghouses and all of the many manifestations of bourses around the world and everything relating to their clearing and settlement, comes out Monday through Friday. You can sign up to that at exchangeinvest.com. We've got a free 1-month trial for new users, and that's coming to you for the majestic price. I don't even know how we managed to do this at this price, $375 a year. Enough. We're going to sound like the shopping channel if we get any further. Back to our terrific conversation we're having today, Clearing Europe with Rafael Plata. Rafael, we've got a question from our doyen of commodities, a recent guest on this show as well, Anne Berg. Check out that show, ladies and gentlemen, if you're interested in the commodities markets. Absolutely epic. It's archived on Facebook, YouTube, and LinkedIn, where we're live streaming. Just search IPO-VID. Anne Berg asks, can you conceive of a situation, we need some foreboding music now, where the guarantee fund, clearing members' contributions, performance bonds, lines of credit, etc., are inadequate to prevent a massive default? This question could also be phrased as, how are you sleeping these days, Rafael?
Yeah, well, thanks, Anne, for the question. So absolutely, yes, I can imagine the situation because it has happened in the past. It did happen in the past that CCPs did not have enough resources. In Europe, the last time that happened was in 1974. So that was like 50 years ago. And but it did happen. I think now we are in a totally different world with a different technology, different regulation, different benchmarks. And I think arguably it is potentially difficult for that to happen. Obviously, it can happen because nothing is impossible. But I think it is arguably difficult. If you think of the famous, well, cover 2 standards that CCPs are subject to, CCPs by cover 2, I mean that CCPs should be able to withstand the default of the 2 largest clearing members. So that means that for a CCP not to have enough resources to deal with the default, we would need, I'm sorry, picking names, I may be sued by this, but just picking names very randomly, but we may need like JP Morgan and Goldman Sachs to go bankrupt at the same time. Is that possible? Yes. Is that likely? Perhaps not very likely. But I think it has happened in the past. So the regulation is the CCPs work on a daily basis to ensure that this is not the case. And I think CCPs being commercial entities, most of them, I think it is actually, even in their selfish commercial interests, it is their interest for this not to happen. So it is in their interest to have enough resources to ensure that this does not happen. Because if a CCP have had an instance like this, I think it might be quite difficult for them to just to get back on business. I think it could be relatively difficult. There is quite a lot of legislation that has been put out in addition to the so-called Armageddon scenario. So not only you deplete all your pre-funded resources, but there is the recovery and resolution, the Armageddon legislation. So there are some resources there, and so there are resources. CCPs calculate, as you know, on a daily basis, the stress tested portfolios. CCPs are stress tested by their authorities as well, in the US, in Europe, in other jurisdictions. There are independent stress tests by the authorities that try to push CCPs beyond the regulatory standards and try to force them even more than what standards say, and see to what extent they're able to withstand that. I am very proud to say that European CCPs they have actually passed all the tests, the 5 tests performed by the European authorities, by ESMA. They have all passed them over the last 7 to 8 years that they've been performing these tests. So it is possible. Yes, it happened in the past. Ages ago, it is likely. Hopefully, not very likely.
So there you have it. Armageddon is something you consider more or less every day in the central counterparty clearing world, I think, and it's you really, yes, you really have to. It's a fascinating thing. Thank you very much, Hanberg, for that absolutely fabulous question. So, I mean, you mentioned this a couple of times, and obviously one of the things that's just fascinating about the CCP business is how different the structures are in different parts of the world. I mean, obviously the US moving to T+0 for their cash equities, not so difficult when actually you've got one big monolith that actually clears all of the US equities and bonds via DTCC. There's been a bit of discussion recently about the number of venues there are around Europe for trading, both cash markets, derivatives, and so on. And I'm just curious because I read something the other week which was suggesting that maybe there are too many CCPs in Europe.
Okay, thanks for the question. This is where, if there's any each member watching, they're probably looking at me like, what is he going to say? So, are there too many CCPs in Europe? Yes, I've heard that comment before. I've heard an assertion like that before. Yes, there are too many CCPs in Europe. I disagree. And of course, people would say, of course, Rafael would disagree because he represents them. Let me qualify my disagreement. There are 19 CCPs in Europe, including EU, Switzerland, the UK, Turkey. 19 CCPs. They serve different jurisdictions, as I said, UK, Switzerland, EU. But still, taking into account that they serve different jurisdictions, if you look at those 19 CCPs, they do not clear the same products, all of them. You've got 7 CCPs that clear equity, you've got 7 CCPs that clear financial derivatives, as you would expect, because with the normal evolution of a CCP, you would normally start with clearing equity or start with clearing financial derivatives and then do equity or the other way around. But those are linked. So 7 CCPs that would do those. Then you've got about 5 CCPs that clear energy. Then you've got about 3 to 4 CCPs that clear OTC derivatives. You've got 3 CCPs that clear repos. So a couple of CCPs that clear crypto. So is this really concentrated? I wouldn't say that. Is it really, sorry, is there too many CCPs? I am not sure. I think it is pretty concentrated depending on the product that you looked at. And this is what is different because most CCPs, they run their services with according to their clearing service that they clear, and they run them independently. And I think it's important to look at which asset class are we talking about when we're talking about the CCP will be very concentrated. I am not sure that this is an industrial economic question. It's very, I'm sure if there's any academics in the audience, I'm sure they'll be able to answer this much better than me. But what is the actual number, the right number of CCPs out there? Is it 1? Is it 2, 3? Is it 7, as with the maximum that we have in a couple of markets? I am not sure. But if you compare to perhaps other industries, if I'm talking of financial services, it's difficult to compare, but there are 5,000 banks in Europe. So is that too many or too concentrated? I am not sure. But yeah, 19 CCPs doing different asset classes, with the asset class having the most CCPs in it being 7 CCPs for equity or financial derivatives. I am not sure that this means that there are too many CCPs in Europe.
It's very interesting. Several points from that I unpack. Obviously, there are 5,000 banks, as you correctly point out. I suppose what we also have to say, 50 years ago, it only took one of them, Herstatt, to cause the last problem for CCPs, which helped everybody raise their game and also added a new noun into the CCP risk and technical lexicon, I suppose I should say. I think in both cases, actually, I'm going to add Anberg's comment and append it on my behalf and possibly hers. Certainly, she wants to append it to your previous answer. She appreciates your nuanced answer about risk and CCPs. I would appreciate your nuanced answer about the number of CCPs because it strikes me. I was quite shocked when I saw that come out in the public domain, simply because actually also the person who said it, I'm not going to name them because I think they are very, very experienced and generally a great thinker in markets, but I did disagree with them there because, as you say, there are 7 equity CCPs, yet we have 27 or something equity exchanges and about 100 equity trading venues. And equally then, when you turn it on its head, the concentration risk surely adds up inexorably if you end up with fewer and fewer clearing houses in the world, because there are fewer people thinking about the risk models and so on, even if they have a number of pools within their different markets. At least that's just my simple thinking. I'm obviously not right inside the business from Brussels like you, Rafael.
Well, you know, but you're one of the, I'd say you're probably one of the best analysts on CCPs and exchanges and CSDs. And I think if anyone in the, I guess, well, everyone in the audience is registered to your daily newsletter, but if not, they should, because not only is a newsletter, it's much more than that, because you do include very interesting data, and you're able to see this. So I'd say I agree with you, Patrick. I am not, again, not sure exactly what the exact theoretical answer is, but yeah, just looking at the numbers, is it really very concentrated, or do we have too many? It does not. It doesn't look like to be to me. Remember that for the, to give you a figure for those perhaps less familiar with the EU in the audience, in the EU we've got 27 countries that are members of the EU. There's no one CCP per country. No, not at all. We've got 14 CCPs, so we've got one every 2 countries. And of course, several CCPs, they actually serve different markets, not just 1 or 2 or 3, they serve different markets. So I think this, that based on what I see from my members at least, or what I hear from them bilaterally in meetings, I think competition is actually working in Europe.
I think you're quite right. And I also think one of the things, going back to it again, that each offers is the fact that the amazing intellectual transformation, the transfer of knowledge that goes on within each is really exciting to see. And I don't believe that removing competition from the market is necessarily going to build a better breed of CCP than we currently have. Whereas you say, essentially, there's around about half a dozen or so CCPs in each individual sector or segment of the market maximum. However, that's just my viewpoint. Rafael, you've been with us for nearly an hour this evening. It is time for a traditional final question. Rafael Plata, where do you think the capital market revolution goes next?
Thanks, Patrick. I think it's going next, I'd say 2 things that could actually affect the capital markets revolution from my point of view. One thing is something that is very close to my heart because it's a fascinating topic, I find. Quantum computing. Quantum computing is expected to be a massive revolution in technology, probably much bigger than AI. To be seen, you would be able to have much higher computing capacity than what we can even dream of today. So it could be really a quantum leap, to use that word. And how could that be applied to financial markets? I think there's endless possibilities with quantum computing, obviously for every application. That is one. The other one, extremely important, would be financial literacy. I think financial literacy is something that still has a long way to go, and it has so many possibilities of actually developing and improving capital markets and making them grow capital markets. Think of in Europe, there are currently 14 trillion euros that are sitting with banks or in cash. If you try to unlock quite a lot of that through people having increased financial literacy, thinking that if they invest, they could actually get a better return somewhere, just think about a portion of those 14 trillion, which, to give an order of magnitude, this is 3 Germanys in terms of GDP, 3 Germanys, unlocking a part of 3 Germanys in the future into capital markets. I think this could really revolutionize capital markets.
I find that totally inspiring, I've got to say. I think, first of all, the quantum computing thing drives us into a whole new world of how we will appreciate risk, calculate risk, and therefore the opportunities for the CCP world to make an even finer set of lungs and kidneys for the world of finances is just absolutely fabulous. And I agree with you, financial literacy has got to be key. We've got to try and unlock some of that 14.3 trillion, because that's going to be the way that the Capital Markets Union in Europe is actually going to succeed, and we're going to raise prosperity for everybody. Rafael Plata, it has been a joy discussing with you today. It really, really has. I want to say a huge word of thanks to our 2 magnificent contributors of very excellent, and if I may say so, also nuanced questions, Chris Messina of Messy Times and the great Anne Berg, our commodities doyen. Fabulous to see you. Thank you very, very much also to the production team today, Janella, Jamil and Rashid. special and you've done a marvelous job. Next show, coming next week, we're going somewhere completely different, a world slightly beyond CCP. We're going to be talking about unlocking Namibian growth, and that's going to be with our special guest, the CEO of the Namibian Stock Exchange, Jan Bazowin. Catch that show, ladies and gentlemen. There are incredible things happening in Namibia right at this point in time. You talk about unlocking 14.3 trillion of value. Not quite there yet, but they are going to materially change the prosperity of that nation. My name is Patrick L. Young. Thank you for joining us today. I wish you all a great week in life and markets.